Next question. I am thinking of giving up my US citizenship and I'm looking at the exit tax. So just for those who may be US exposed, so just to kind of comment on what this person is asking, when you are giving up your US passport or your green card, and we're not the biggest team in the world, but we do 3 or 4 every month. These are 3 or 4 people who are giving up a US passport or green card, right? So we're kind of familiar with the process. You will face an exit tax if you're what is called a covered expat. And the definition of a covered expat is it can be triggered in 3 ways, but the 2 most common ways would be if you look back in the past 5 years and your tax liability has been, let's say, $170,000 or more. Or if your net assets, all your assets, your antique, your wine collection, whatever it is, your cars, houses, whatever, all your assets minus your mortgages and stuff, so big liabilities or whatever legal liabilities you have. If those net assets are in excess of $2 million, then you may be subject to an exit tax. If it is that you do trigger that exit tax, by virtue of being a covered expat, certain calculations will need to be made. And this person is asking about RSUs or restricted stock units, which of course, immensely popular, particularly those in the tech space. So I'm assuming this person works in the tech space as well. So it really depends as to whether you should include your RSUs in the calculation. Depends on whether your RSUs are considered eligible deferred compensation. Ineligible deferred compensation. What do we mean by that? If it's eligible, then you don't need to include it in the calculation, as when there's going to be a distribution, when there's a liquidity event later on, after you've surrendered your passport or green card, it'll be subject to withholding automatically from the US perspective. So that's why they make it eligible and deferred compensation. So, right, so like a 401k or whatever the case may be. So that would also fall into that category. So if your RSU is potentially issued by a US company, then it may be, of course, you need to get proper advice, but it may be eligible deferred compensation. If your RSU is not issued by a US company, it may be ineligible. So in other words, it needs to be included in the your net worth calculation to see whether you're over $2 million or not. So just in terms of that mathematical calculation, that's how we treat with RSUs. Hope that helps. If not, feel free to reach out and we can take a deeper dive into your situation.
Please subscribe, like, share, and comment below. Our books and upcoming events are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.